today as we discuss a very, very critical topic, one that we think is often overlooked, but very important. Basically talking about how we can build our insurance portfolios in 2026, whether you're just starting out to see what insurance looks like, or you're just about exploring how insurance fits into your financial life or your daily life. This webinar will help you explore the various insurance options and policies that you need, that are essential in your current stage of life. So I want to say welcome to our attendees and our panelists, and thank you for finding time to join us today to have this session. We have panelists who will be doing justice to this topic. We have a keynote presentation which will come up shortly, and it's going to be a great time. So you can also drop your questions and comments and thoughts in the Q&A section on your screen, and of course, with time we'll take the questions, and surely we'll go home with a lot of knowledge today. Without wasting much of our time, I'd like to invite the team lead of corporate life underwriting, Coronation Life Assurance, Mr. Emmanuel Akinlabi, to give us the opening remarks.
Okay. Good afternoon, everyone. Thank you for joining us today. It's always a pleasure to be here with people with like minds who are intentional about building a better future. And really, that's what today is about, being intentional. So as 2026 draws closer, many of us are already setting fresh goals. We're already thinking about having savings, investments, career moves for some, maybe even relocation or buying a property. But there's one important pillar of financial planning that people really think about until something goes wrong, and that's insurance. Many people in Nigeria always leave it to God, especially Christians, you always leave it to Jesus. Because the truth is, all it takes is one unexpected event, an illness, a job disruption, an accident, a financial setback, and everything we've worked for can change instantly. This webinar has been designed to help you avoid that scenario. Whether you're a young graduate finding your path, a couple planning your next steps, a single professional handling life independently, or a family building long-term stability, there are different insurance solutions designed for every stage of your life. Today, our speakers will break down these options in a simple and practical way. We'll explore the essential covers you need, the mandatory policies you have probably ignored that have been made mandatory by the federal government of Nigeria, and also everyday scenarios where insurance could save you emotionally, financially, and mentally. Our goal is very simple: to help you walk into 2026 confident, prepared, and protected. Thank you once again for being here. By showing up today, you are already taking an important step towards a more secure year ahead. Thank you, everyone.
Thank you very much, Emmanuel. Thank you very much for that wonderful opening remark. Just as you said, by showing up today, our attendees are already taking a very important step towards having a successful 2026. Insurance shouldn't be an afterthought. It shouldn't be overlooked, and which is why we are here today to explain to people the best policies that are essential to them at this stage of their lives. We'll move straight to our keynote address today. Our keynote speaker is ready, and he's no other person than Mr. Kehinde Grillo. Kehinde is a distinguished corporate leader who has over a decade and a half tenure in the financial sector, specializing in banking and insurance, specifically health, general, and life insurance. He's got a remarkable skill set, having excelled in various domains, including relationship management, product development and management, partnerships and collaboration, sales planning and business development, marketing campaigns, customer management, and of course, overall business strategy. His profound comprehension of the financial industry has propelled growth and yielded outstanding outcomes for both retail and SME clients. Kehinde Grillo heads partnerships at Coronation Life Assurance. Good morning. Good afternoon, Kehinde.
Good afternoon, Emmanuel. Good afternoon, everyone. It's a pleasure to be here this morning.
So you can go ahead with
okay,
your
so I'll just go ahead and let me know when you can see my slide.
Yes, all good.
Okay, all right. Thank you very much once again. Thank you for the opportunity to be presenting something as important as this, not just important for 2026, but something that is also a critical, factor for both individual, family, businesses that are represented here. And just like Emmanuel said in his opening remarks, a lot of people are planning for 2026. In the next 6 to 5 weeks, we'll be saying goodbye 2025 and hello 2026. A lot of people have gotten their financial goals, their career goals, their academic goals, what they want to achieve, where they want to go. But very few people look at their insurance portfolio. And I'm happy that I'll be taking us through how to build your insurance portfolio like a pro. Because going to 2026, it's going to be a period that will be defined by a lot of things. We're going to see rising health and financial risk. Rising health as a result of remote work, right? We've seen that. We've seen chronic diseases going up, cancer. We've seen lifestyle diseases such as hypertension and diabetes going up, financial risk. We've seen it coming, loss of job, unemployment rate. These are the challenges that will happen in 2026. Fast changing lifestyle. We've seen that based on the kind of remote work that's coming up now. Everybody, a lot of organizations are embracing remote work style. We've seen busier schedules than before, right? And this has also led to certain types of risk coming up. Economic uncertainty, digital and cyber exposure. We're getting digitalized more and more. AI is coming up and we're embracing it more and more. And because of this, we're also exposed to cyber security, cyber fraud, internet fraud, and so forth. Even for corporate organizations, they are not exempted from cyber risk issues. And of course, high cost of medical care. Going to 2026, we're still going to say it. Cost of diagnosis, just cost of drugs, just cost of medical treatment is going to go up. Asset replacement. I was still joking with a friend of mine. I was saying that, look, it's better you take care of your assets, especially your car right now, because cost of repair, cost of replacement is something beyond the normal. So these are things that will happen in 2026. The question is, are we prepared for it? And 2026 will be rewarded for those who proactively plan for this and not just reacting. So I'm going to show us how we're just going to build, whether we are an insurance professional or you're new to insurance, I'm just going to take us through the simple steps you can take in building a strong and very good insurance portfolio for 2026. We'll just start with a mind shift and a framework that will help us. So what's insurance portfolio? We're talking about a collection of protection tools, insurance tools that will ensure that you are covered in all areas, in all aspects of your life, your health, your assets. Just like we said below, there's life insurance, non-life insurance, health insurance. When you're covered in all these sectors, it's more or less like your financial ecosystem. Everything is guided. It's just like a knight going for a war. You see them with their armor. The helmet is there. The shield is there. The body armor is there. Everything is guarded so that they're well protected. And that's what insurance for 2026 should be for. We should look at the portfolio, not buying insurance as required, but as a portfolio, being strategic about it. Because going to 2026, the winners will be those who don't buy policy, but they build their portfolios. You could buy a policy, but you leave the other side of the insurance part exposed, and that can still influence your plan. So you can imagine next year, a lot of organizations are already thinking, okay, this is our revenue budget for next year. This is our PBT we aim to get next year. Just imagine a manufacturing company by March 2026, something happens to their main machinery, something happens, and then they are not able to fix because of the cost. It disrupts the plan. The same thing for individuals. Any unprepared expense can wipe up your savings, can wipe up your plans, and you are unable to attain that goal for 2026. So building your insurance portfolio, it's not a do-I, it's a necessity that shows that yes, you're prepared for 2026. So we look at the framework. Pro. Simple framework that will help us establish how to build that insurance portfolio. P for the Pro simply stands for protect what you cannot afford to lose. Identify those things that you know that if anything should happen to them, it's going to be catastrophic for your plans for 2026. Your life, your income, your source of income, how do you make money? You should be able to identify that, look, okay, these are the things that will affect my income in 2026. Your health, your assets, your key staff. These are just different things that you can look at. You need to sit down and look at things that you know that you cannot afford to lose, that if it happens, is going to really, really affect your strategy for 2026. Once you're able to identify these things, next thing is to reduce the risk exposure to these things by getting the right insurance policy for them. Like I said, insurance portfolio covers every aspect of insurance, and that's why you're looking at identifying the risk in all aspects, all areas of your life. You look at it, whether you're dependent, whether you're depending on someone, whether you have people depending on you, you're a career person, you're a business person, you're looking at your business, you're looking at your health, you're looking at it from all angles. Then you start to identify the risk associated, the insurance that will block the risk associated in all of these parts. And lastly, you need to optimize for wealth building and cash flow. You should understand that insurance is for legacy planning, investment growth, retirement income, and estate equalization. Legacy planning, for the good thing about insurance when it comes to legacy planning is that you get guaranteed and immediate payment. There's no delay. There's no need to start looking for probate cost. There's no probate cost. There's no probate delay in this. Your beneficiaries get the sums immediately. Investment growth, we have saving plans and insurance that can ensure that you get steady income growth for a particular period of time. Retirement income helps, especially those in the senior citizens, to start to prepare for retirement, which ensures that they keep on getting the same funds that they've been enjoying, that sustains their welfare and their mind throughout their lifetime, even after retirement. So using the PRO framework, we're going to look at how we can identify what we need, because insurance is not a one cap fits all, right? Depending on your age, depending on responsibilities, depending on your lifestyle, will determine what type of insurance you need. So what we're going to do next is just look at different buckets, and then as a foundation, then from there you can start building. The purpose of this is even to create an awareness to help you to start with the foundation on how to build an insurance portfolio. So looking at, for individuals, for personal, we're looking at young professionals between 20 to 35. One thing young people usually assume is that insurance is when you're older, but no, I tell you, the moment between 20 and 25, between 20 and 30, once you're 18 and you're old enough, once you have dependents, you're old enough to start taking care of yourself, you need insurance, because really, this can be one of the things that will help you to, attain where you're going faster, or it's going to lead to delay, right? So for once you're between the age of 20 to 25 to 35, these are things you should consider. Health insurance, at least minimum of the basic plan, right? Income protection or disability cover that will protect your salary or source of income. Device insurance, because yes, we're not looking at assets yet because you're still growing, you're coming up, you're building up yourself. So device insurance is important. Things like your laptop, your mobile phones, and so forth. And this is where you should start your savings, investments, insurance, and linked insurance plans. It helps to build towards your future, financial discipline, which helps. And of course, we have the travel insurance. Why do you need this? Number one, the premiums are low for this kind of insurance. And of course, they have higher future benefits. At this age and at this time, these are things that you need to consider to be in your insurance portfolio at this stage. When we look at responsibilities, we're now saying that, okay, look, families, you're married, you have dependents, things are now different. These are things you need to have in your insurance portfolio. Number one, you have to have a comprehensive health insurance for the entire family, right? Because you can imagine when one of the family members falls sick, right? And then you now have to spend your entire savings in getting the person to the hospital for recuperation. So it's best you have a comprehensive insurance. You have a term life insurance that ensures there's income replacement. Term life insurance could be as simple as a life insurance that ensures that, look, people that are dependent on you, even when you're not there again, they have the capacity to keep living, to maintain the standard of living they've been having, right? Critical illness for disease such as stroke, cancer, heart attack, highly intensive illnesses that require immediate treatment, specialization, and are usually very expensive. You need to get yourself covered for that. So in case anything happens to you, the family do not need to start running around, selling property, selling things. You are well covered. Education saving plans for the young ones. Home insurance for your assets at home, your TVs, your fridge, every other thing at home. And of course, auto insurance for mobility. These are things because families require what? Security, peace of mind, and stability. So these are things you need to put in your portfolio as a family member, or you have dependents. And of course, for high net worth individuals, we're looking at dollar-denominated life insurance, key man and business continuity covers, estate planning linked insurance, asset protection for your cars, your home, your collections, international health insurance, retirement income annuities. These are things that we need for HNIs, and I'll just go to our senior citizens. 55 and above. These are things you need to start considering, because for you at this stage, health stability and legacy is more important. We need to start looking at international health services, critical illness and hospital cash insurance, annuity, retirement annuity is something that will ensure that your standard of living does not drop after retirement, but you keep maintaining, you keep earning that same thing you were earning during your active years, during your career years, right? Life insurance for estate equalization is very, very important as well. These are different categories that we can look at for individuals. And I'm sure with one of them, you can see yourself in any one of these buckets. These are things that you can start as a foundation for building your own your insurance portfolio. Things that you need to have and show that, yes, I'm covered there, I'm covered there, right? We'll look at for businesses, looking at the small, medium, and micro and small businesses. Number one, at this stage, you're looking at stability and continuity, because any small unexpected event can actually close down the business at this stage. So for business owners in this stage, number one, you need to have your business owners package. Fire, theft, burglary, you have to have that insurance. Public liability is now compulsory. Group life is a compulsory requirement by law that you must have. Workman's compensation, personal liability, goods in transit if you move goods around the lot, and of course, health insurance for your staff, because your staff are also a key factor in the success of your business. Looking at medium enterprises, now you're going large. You are now looking at people risk and operational risk. For you here, you must maintain a proper cash flow, asset operations, and reputation. And for this level, you should have a group health insurance for staff, group life, which is compulsory for your staff, key man insurance, which protects against key staff. You have certain directors, you are the owner of the organization. If anything happens, you need to ensure that the business lives on. Professional indemnity for those in the tech space, finance space, consultancy space. Cybersecurity insurance will now start coming in, because the system is wide. Your system is bigger than the regular ones, and you start to have exposure to cybersecurity. Fire and special peril, machinery breakdown, you start to consider for your assets, because these are the major ways in which you make your revenue. And once they break down, cost for repair is usually high. So you need to ensure that these things are well covered. And of course, you have the business interruption insurance. When we look at large corporates, large firms, we're looking at your corporate health insurance, group life insurance, your cyber insurance, director and officers liability insurance, marine and aviation insurance for logistic and heavy firms, energy, engineering insurance, depending on the sector, business interruption, treasury risks, and political risk. These are things, because for large corporates, you now look at balancing your compliance, governance, continuity, and of course, global risk exposures, because at this level, all these are not negotiable. So these are for business. We've talked about the individuals, personal, we've talked about businesses. So in closing, for going into 2026, it's not a question of should you buy insurance, right? It's a necessity. It's how do I structure my life and business so that nothing catches me unprepared. We can have plans, we can have visions, we can have ideas, but the moment something happens, at times we might never recover. So why not just transfer your risk? Why not just play safe and ensure that you have everything covered? You are shielded against anything that can slow you down in 2026, because there will be opportunities. 2026 is going to be a great year, but it won't be nice for us to, not enjoy that success story because of we've left room for something that we should have been able to plan for. So looking at 2026, we expect you to build your insurance portfolio like a pro. You just when you do that, you're not just protecting yourself, but actually protecting your dream. You're protecting your family, you're protecting your business, and you're protecting your future. Thank you very much.
Well, thank you very much. Thank you so much, Ken Digulo. Sounded so much motivational and I mean very, very expository. I got a lot of notes from your presentation. You talked about the goal not being to just be insured, but to be strategically insured. And you went on to tell us about the PRO framework, which I found very interesting. Building insurance like a pro is not just in the saying, but that there is a pro framework. So we need to ask people, are you protecting yourself from what you cannot lose? Are you trying to reduce your exposure to major risk, or are you trying to optimize your wealth, optimize for wealth building and cash flow? So Very, very wonderful presentation. And I'm sure that the questions, you can put the questions on the Q&A section, and we'll take them at the end of the session. We'll quickly move to our panel discussion. But before that, we'll have a poll up now, just to get our attendees to know, understand the difference, how ready they are for 2026. So the questions are on your screen. Just answer the questions. Tell us how ready you are for 2026. If you'd want us to also reach out to you for a free consultation, basically to just help you understand the policies that we think you need in 2026. I mean, Kehinde has done a great work trying to expose every segment of the audience, whether you're a business owner, whether you're a family person, you're just starting your career, there is insurance for as much as everything. So thank you again, Kehinde. We'll move straight to our panel discussion. I'd like to introduce our panelists. In addition to, of course, our keynote speaker, Kehinde, we have Adeze Ume. Adeze is the head of digital channels at Access Bank PLC. She brings over 24 years of rich cross-segment experience in retail products across youth, consumer, MSMEs, women, and affluent segments. She has excelled both as a product manager, a segment head, delivering innovative solutions to shape the bank's retail digital ecosystem. She's built deep expertise in retail products and propositions, which seamlessly evolved her current role in digital products. Adeze is a passionate professional. She's a certified retail banker from the Retail Academy in the UK. She's also qualified as a chartered banker and completed an executive program at Columbia Business School. She specializes in customer engagement, social media planning, and analytics. And in 2023, she was appointed to the board of Access Insurance, a subsidiary of Access Holding Company, as a non-executive director. So, of course, Adeze sits both in banking and insurance, so she's perfectly fitted to speak to us today. She graduated as the best female student in her class with a BSc combined honors in biochemistry and zoology from the University of Nigeria in the year 2000. Thank you very much, Adeze, for being here. Good afternoon.
Thank you very much, and it's a pleasure having me. Thank you.
Thank you. And our other panelist is Miller Kingsley. Miller is an expert in actuarial consulting. He's a fellow of the Society of Actuaries USA and the Nigerian Actuarial Society. He's also an associate of the Chartered Institutes of Nigeria. He has about 2 decades of experience working within and consulting for insurance companies across Africa. He's currently an lead actuarial consulting at Ernst & Young. Good afternoon, Miller.
Good afternoon, everyone. Thanks for having me.
All right, thank you. Thank you very much, our panelists, for finding time to be here. We'll dive right into the questions, and I'd like to start with Miller on this first question. All right. Let's talk about Nigerians and how they like to pay for things out of pockets, right? Research shows that most Nigerians like to pay for things out of pockets. Things like medical emergencies and all, day-to-day living, fixing of vehicles, repairs. And we know that medical emergencies, there are around 70% of Nigerians paying out of pockets. Now, can you highlight a few everyday scenarios, medical, job-related or property-related, where lack of insurance exposes families into major financial shocks, especially in scenarios where people are not aware that insurance would have saved them from such financial shock?
Thank you, Vincent. I think Mr. Kehinde has done a great job at giving a background to those insurances that we need and why we need them and why most Nigerians don't buy them. And there's something that I heard a while ago about insurance, which I'd want to share with you. Someone told me that insurance is the only way that a poor man can leave an inheritance for his family. And initially, it didn't make a lot of sense to me, but when I thought about it, there's actually no other way that can happen. In every other way, you have to be rich to leave an inheritance. And I can relate very much to that story because my dad died when I was 7. And I recall very vividly how much my mom struggled through that experience. And I don't think she's recovered from that now. It's affected her health, so it's a real life situation. And she was, by the way, she was 27 at the time. So there's almost no 27-year-old today that would believe she would be in that situation, but that's the way that life is. And that's why people have to get prepared. Like Mr. Kane, they said, it's better to get prepared. And usually it's for a small amount of premium. Just for a small amount of premium, you could get protection. But the biases in our minds are so much. I had an experience recently. I was speaking to an agent. This is an insurance agent, and she was trying to sell me some savings products and stuff like that. And I said that I wanted to buy a life insurance. And she asked me a very funny question. She said, "Are you planning to die?" And this is an insurance agent, So imagine for the average person out there that doesn't even know a lot about insurance. So the misconceptions are a lot, the miseducation is a lot, the ignorance is very huge. And thanks to Coronation for setting up this session. Hopefully, those of you in the session comes out of this with a better mindset around insurance. So yeah, obviously, when someone is talking insurance, he's trying to sell something, obviously, but beyond that, there's a financial need, a financial service that is being communicated to you, which is really what the issue is about. It's a protection. So yeah, Vincent, there's a lot that people need to. I think Candy has mentioned many of those products that people need to be conscious about and plan for. And interestingly, life is getting even more precarious than it used to be. The uncertainties are increasing. I do recall when I was growing up, there was no risk of somebody being kidnapped. That's a different story now. So there's so much that we need to do to get up to speed on insurance. And I'm encouraging everyone on the podcast to wake up and think through what are those risks that you're going through on the basis of what Kane there shared, and see what protection you can get for yourself at a small premium to ensure that you don't have to pay out of your pocket. Paying out of your pocket can be inconvenient. So typically a rich man can afford to not have so much insurance because if something happens to the asset, he can get another one. But the poorer you are, the more you actually need insurance, because a single loss could throw you out of balance. And that's exactly what you're trying to protect. So you're trying to substitute a small premium that you are certain about in exchange for so many contingent cash flows or payments which you may not be able to quantify. And by the way, anything can happen to anybody, regardless of age or gender. Yeah, thanks.
All right, thank you very much. Thank you very much, Mila. I mean, insurance is the only way a poor man can leave inheritance for his family. Never thought I'd hear that, but in reality, it is true. I mean, a while ago, on one of our recent webinars, we talked about how people could build, or leave Nepo babies, right? If you've not been a Nepo baby and you want to create Nepo baby out of your children, insurance is probably one way that we think that people can do that. So, I mean, you're very spot on, and I hope that our attendees take one or two from that and be able to understand that with a very little premium, you can create a future for your family, the kind of future you desire that probably didn't have, but for people coming after you. So thank you very much for that. We'll move to our next question for Adeze. Now I want to talk about, particularly because of where you sit, right? Banking in Nigeria reaches around 70 million people. On the contrary, insurance penetration is still around below 2%. Now, we know that bank assurance, the partnership between banks and insurance companies, for instance, Coronation and Access, has been a powerful tool to help us to bridge that gap by bringing insurance closer to people who come to the bank everyday banking customers. So I'd like you to just walk us through this partnership between bankers and insurers, and just let us know how it works in practice, how simple it is to even buy insurance, because a lot of people still think that you need a lot of paperwork and forms and all that. I mean, with banking in play, how easy is it?
Yeah. So thank you very much, and a very good question. Just like Kende has said earlier, the trick is really about getting insurance very much closer to the people, right? You invest where your money is. So most times people are in banking, right? But they hardly take insurance. So our bank insurance partnership is one of the innovative ways to actually make it easier or giving deeper access, right? So that it's embedded in the lifestyle without knowing it. You're picking it. Take for instance, we've had an evolving partnership where initially it was having over about 50 branches have our implants, right? Doing the insurance or cross-selling the insurance. And we have also evolved it further to the digital channels, right? Where today you can dial a code, right? That 901*25#, and you get all your insurance needs. And then that has also solved the problem of location. So if you're in Akwanga, if you're in Suka, if you're in Lagos, if you're in Taraba, you can actually gain that inclusion, right? Even on our mobile app today, if you go to our mobile app today, you can see that it's actually easy to actually subscribe. And this is why I actually loved Kende's presentation, because it would be sort of a great way to launch 2026, right? So that we're better equipped with knowledge, and most importantly, appreciating that there are easier ways, to do it. That is as simple as being on your app, is as simply as being on your USSD code for the mass market segment. And even further, for those who still want that personalized touch, you can actually walk into a bank and actually see an insurance agent and, go through the rigors of helping you to identify which of the insurance product that meets you saw what Kende had given us, the different classes of people and potential needs you may. So we even have that level of conversational profiling to enable you actually take out the best insurance. So it's an evolving space, because as technology keeps evolving and we keep looking for more ways to actually cause that penetration, it will happen. But yeah, the bank insurance agreement between Access and Coronation is actually at the forefront of actually changing the narrative, but it's only 2% penetration. Thank you.
Thank you very much. Thank you very much, Adeze. And I mean, you've nailed it, right? Insurance can be purchased now very simply on the Access Small app. You can find insurance there. USSD code, you can dial *901*25#, and you get it going, right? And real, genuine. Some people still prefer paperwork. I had a customer who says, "Bring my papers to Ibadan and I need it," right? But again, it's still real, genuine. The most important thing is you have this policy, and when you need it, it shows up for you, right? So thank you very much, Adeze, for that. I'd like to move on to Kende Grillo. I was going to ask you to tell us a simple framework, but of course, you've done that with your pro framework, and I'm sure that for those who are joining late, we'll share the presentation with them and the record, and they can understand the pro framework to get into next year. But let's talk about customer behavior that's shifting. Right from 2020, when COVID happened, it's been different. I don't want to say we've been different set of humans, but a lot has changed. The impossible is seemingly becoming possible, and I mean all that. So based on the trends that you've observed in the past year, 2024 to 2025, across health, life, and protection products, which insurance solutions do you expect to be in the highest demand in 2026, and why? This is asking you to forecast now.
Okay. Based on what we've seen so far, especially during the COVID period, where underlying issues were coming off because of certain viruses, people losing their loved ones. We had people staying home for a long time, psychological effect of the rest. Yeah, there's a lot of impact that it had upon Nigerians and a lot of people, right? And there are certain things that came out that I think people are more aware of, right? One of such things is the critical illness. Yeah, and of course, there's critical illness insurance that protects against this kind of disease, heart attack, kidney transplant. You want to do any kind of organ transplant. When we define critical illness as illnesses that that require immediate intervention, right? They require specialists and they're capital intensive. So I think this is one of the things I expect to go up based on what we've seen in the COVID era, that will go up in terms of insurance policies to get critical illness insurance, permanent disability, temporary disability that can affect incomes, right? We've seen that. And one other thing again is that people are now aware of products that offer both protection and liquidity, right? So before, yes, I can invest my money, and that's the business about investing in insurance, because you know that your investment doesn't just give you returns on your money. There's also a life cover that comes with your investment. So in case anything happens to you, there's a life cover that is paid to your family. Just like Miller said, and I really, really love that definition, that insurance is where a poor man can actually leave inheritance for his children. I think, yes, COVID also taught families the value of cover, right? In as much as people want protection, that, okay, yes, anything can happen at any time, they also want value back. That while I'm saving, I expect that, yes, not only will I be protected in case something happens, but is my savings is earning something and I'm getting something in return. So we're talking about critical illness insurance. We're talking about our life-saving investment plans, educational plans that you can buy and protect your loved ones, because we've seen people lose each other. Then funeral insurance also is something that will also be rising, right? For the SME sectors, there are also things that can happen. Business interruption, we're going to see that will happen as well, where people, yes. So you have a business that is growing, something happens for that period in time, you have insurance that will cover the losses you're going to make, right? Or revenue that you have been generating at that point in time. So for me, those are insurance tools that I think that will likely come up in 2026. And of course, apart from the regulatory ones, that is now compulsory, liability insurance, compulsory, for filling stations and there are also things that are compulsory right now that you must have. So I think those ones, based on the experience from COVID, those are insurance policies that should be get next year.
Right. Thank you very much, Kehinde. And of course, critical illness insurance is not even just for, attorneys on the call can get that for their loved ones, right? When we looked at the Pro framework, it talked about protecting against what you cannot lose. So if, of course, even in your investment, as you're saving, you're trying to build wealth to next year, if you know that there's someone in your family that if a critical illness or a terminal illness happens, that's going to feed into your savings or your investment, you probably just buy the person a critical illness insurance, right? Out of love, while trying to also protect your purse so that what you have saved doesn't go into treating someone you love, right? So, I think that you are spot on. I'd like to ask Mila the next question, just also in the wave of forecasting, right? From an actuarial and regulatory standpoint, what minimum insurance policies would you recommend that every adult have next year, right? Basically to help them manage their personal and financial risk. What minimum insurance policy would you recommend?
Yes, so thanks, Vincent. And firstly, I want to sincerely thank Daisy and the guys at Access for what they're doing in promoting insurance, because while I was working in insurance, the time that I saw that insurance really sold, retail insurance, was when we had a strong partnership with a bank to push it. I think that that's the future of insurance sale. The banks have got the platform, and we need them to drive insurance. So thanks for what you're doing in that space. Around the issue of minimum cover that I think that people would need in the next year, there are two perspectives. First, there's the regulatory perspective, and that is what is in the Nigerian Act around what you must have as compulsory insurances. And the second perspective is what is in your interest to have, whether it's compulsory or it's not compulsory. But typically anyway, regulation around compulsory insurances would typically be centered around what the government believes is reasonable for you to have. So I mean, the government, in its wisdom, doesn't want you to hit a car in this car on the road and constitute a nuisance. So yeah, if you hit this car, you've got an insurance that covers you against that, and then both of you can move on to work and carry on with your life. So obviously a car insurance and at least a third party to save you from that liability that may happen when you hit someone or someone hits you. There's also some compulsory insurance now around public building insurances. So there was a story not long ago about an accident that happened at Popple Mall, where someone fell down or something from the mall. So those are real life incidents. We also heard about the child that got electrocuted in school. So but what we're seeing the next year is there's going to be a lot more enforcement from the government around insurances on public buildings to give protection to you and I when we go to such public places. So we can expect some activities there. Also around buildings, you're constructing a new building, and there's been several instances of a new build. Well, I think the most recent one that made big news was the many floors in Ikoyi that tumbled. I think even the developer himself was a victim. So public constructions like that are now going to come under a lot more scrutiny regulatory wise. So those are insurances to look out for. But personally, whether or not it's regulated, as a very minimum, I would recommend that you look into getting a life insurance to protect your loved ones in the event that if you're the breadwinner, that you're not there, that they have something to carry on with their life. I think you should look into that. You should also look into protecting your assets and your cars or whatever else that you have. These days, insurance companies are getting very intuitive and innovative. So there's almost nothing that you won't be able to insure with them. People insuring their phones, their laptops, and whatever that they need to insure. And yeah, thanks.
All right, thank you so much, Mila. Spot on. I mean, these days there is insurance for. I used to say almost everything, but I think there's insurance for everything, right? So whatever it is, if there is no very public policy out there for it, it's something that the underwriters can sit with you and put together. So there is insurance for everything. So whatever it is you want to insure, speak to your insurer and of course get it sorted. I'll move to Adeze for my next question. Of course, you've built digital products for youth, MSMEs, women, and affluent customers, different segments. You've built different digital products for them. And of course, you understand their needs, their challenges, and the gaps that they have. So from your experience, right, we know that these segments face different financial risks. They face different medical emergencies, income instability, business disruption, investment losses, whatever it is. Based on this experience that you have, what are the biggest insurance gaps for each of these segments, and how can they be addressed in 2026?
Yeah, thank you very much for that great question. So I think the need is clearly established, right, from what Mila has said, from Kenya has said. What we see would be the new needs or the new urgencies to address would likely be in the ease of service. So for the youth segment, for instance, that will typically go for the gadget insurance or even travel insurance, as some of them, even like NYSC, move from one location to other and all that. We would see ease of access, right? And when I mean ease of access, as opposed to maybe paying some lump sums for the insurance cover, I would see in 2026 that the new innovation will be to pay for those things in micro payments so that it's very easy for the clients or for the customers to actually get on board. If I move it to MSMEs, right, that's even becomes more strategic. What I see the gaps are, and which would likely be addressed in 2026, would even be in the methodology. People don't have, money saved somewhere to go and pay for anything, but we could do it so that it is data backed, right? Through the transactional flows, we'll time it so that it is automated and those payments are happening with ease and convenience. And these guys do not feel it at all. I would also see an emerging trend of stickiness where people would like to see their policies on their app, know the renewal updates, right? Know the claim status, the experience. I mean, all the platforms, the Googles of this world, the LinkedIn's of this world, the Instagram, all of them have given us the true definition of digital experience. So what we see that would define even both the users, the practitioners, and even the customers, what will be very sticky solutions that will be so convenient for people to actually sign up. It will be so convenient for people to check their claim status. It will be so convenient for people to, get interactive, even on their WhatsApp. Today, a lot of Nigerians, right, are on it. So what we see in 2026 would be the WhatsApp bots being able to address challenges of consumers. Even the affluents, right, would actually like to see their portfolio on, a single base dashboard, and any need they want, they just, take it there. So 2026, what we'll be seeing will be an emerging trend where digital experience will actually trump over any other type of, and then that would also help us in terms of the penetration numbers which we're seeking to build. So those would be the imminent opportunities, before us for 2026. Thank you.
All right, thank you very much, Adaeze. I mean, you're spot on. We need to see people, when people talk about insurance prices, carrying them, which I mean, of course, insurance is always very affordable. There's also an option to pay in installments. At Coronation, we have that option, so you can take up a policy and pay in installments. And yeah, and I think it was Mila who mentioned last. I think that people, when you have basic insurance, really, there's a scratch on your car on the road, there's no point standing to cause traffic, right? It's just you just call your insurer and like, I've been hit. Smart people just exchange cards and you move on. And I don't think you need to now start engaging in the brawl on the road and all that. So yeah, yeah, I think we'll just move to our next question to Kehinde. And I want us to get a bit practical. I've seen some questions on the Q&A where people talk about their trust for insurance and all that stuff. So I want us to talk about what happens when they don't make a claim. A lot of people are skeptical about buying insurance because I tried to tell someone to buy a comprehensive insurance. He had just bought a new car, really, really good car, and I felt it was very expensive. And I'm like, oh, you should get a comprehensive insurance. And he says, I'm a great driver, and my car doesn't get stolen, and I don't get accidents and all that stuff. So he just got a third party. I wanted him to get comprehensive insurance. So yeah, people don't buy insurance largely because they say, what happens if I don't make a claim? My money is just gone like that. Some people feel like they're spending money they may never use, right? So how do you address this concern, and how should customers think about insurance as part of their financial planning in 2026?
That's a question I'm sure almost all insurance sales guys will be getting every single time. That what if nothing happens? What happens to my money? And I keep telling people that you're thinking it the wrong way and you're asking the wrong question, right? The question you should be asking is, if something happens, right, will I be able to survive? I think when you see from that point of view, it will change that perspective, because people always assume that, okay, yes, I'm paying for insurance in case something happens. No, you're not. You're paying because you're buying insurance. You don't buy insurance because something will happen, right? You buy it because if something does happen, it's going to be too expensive for you to handle it alone, and then your insurance will be a safety cover. So insurance is not like you're losing money. It's actually a safety tool, right? A safety tool, a shock tool. It's something to help you keep the shock, that make sure that insurance helps you to move like nothing has ever happened. Leaves you in the same state. So you can imagine two people, let me just give an instance, two people saving 100,000 naira every month, right? After the 6th month, they both have 600,000. The 7th month, something happens to their phones, right? They're both using iPhones. One has an insurance that he bought for 10,000 naira for that year, right? And then guess what? Insurance company gives him another phone. The other person has to go dig into that savings that he has, or is already 600,000, has to bring another 400,000 to buy a new phone. At the end of the year, you can see the difference, right? So it's not a function of what if nothing happens. The question is, what if something happens? Will you be protected? Will you be able to recover? Right? That's how we should be seeing insurance. You know, if nothing happens, honestly, we'll celebrate with you. We even go to church and give Thanksgiving. But that's not the major concern. The concern is if something had happened, would you have been able to survive? So insurance should not be seen as you're paying and you're losing. You're actually paying, you're actually being responsible, you're actually paying to keep yourself against certain risks, against certain things that can, you know, disrupt your plans. Because when things happen, right, when you compare the cost of the premium you paid to the cost of what you're paying to resolve the issue, you see that it's not, the difference is clear, right? So people should see insurance as a safety tool, right? Something that keeps your financial life steady, even when unexpected, when not the expected happens, you know, you're still living, you're still okay, you're not disturbed in any way, right? I can bet you will see families where the dad or the mom or one of the members gets one of those critical illnesses, right? You see families struggling to raise funds, selling properties, selling their savings, spending their savings, struggling to get the funds. And you see another one that's already had a critical illness insurance cover. With the funds, you can see the ease in which recovery will take place. Those are the things that insurance is doing for you. It's giving you that peace of mind, right? So you shouldn't see it as a loss that nothing happened. It's a peace of mind investment that you're doing. You're paying to remove uncertainty from your life. You're paying to pass your risk to your partner that, look, in case anything happens, you'll be the one to do it for me. So that's how people should see insurance, and that's how to make you understand the value of insurance. When you think of the comfort, when you think of the peace of mind, when you think of recovery, there are certain things that happen that you never recover from, and there's some that you, because you passed on the risk, it's easier for you to go on and move. Just imagine a Uber driver whose life is the vehicle, all of a sudden has an accident. If you have insurance, you get back on the road immediately, like nothing happened. But without insurance, you have to start either digging into your savings or start looking for funds, which also now affects the future. So people should see, that's how people should see insurance. You're partnering with us to ensure that we take that risk from you. It's a peace of mind you're paying for. Thanks.
Thank you. Thank you so much, Kende. I mean, spot on. We need to begin to see insurance as what if something happens and I'm not insured? I mean, 2 months ago, we had similar scenario. I had two friends. They both use iPhones, right? And one was, her phone was stolen at the bus park, a popular bus park, and another left her bag in a car where she was in transit, right? Now, the bag was lost, phone was gone, the other person's phone was gone. Just one had insurance, and for an insurance of around 18,000 naira, I think 3% of the phone got nearly 600K to get a new phone back, and the other was planning to insure it, right? But it wasn't insured. I remember clearly because I was saying, well, let's insure our phone. I had done mine, and she was planning to insure, and it wasn't insured, right? So again, insurance is it's important when you need it and not when when it's a need that you need. So not when you need it and then you don't have it, and yeah, running helter skelter. So yeah, I think that's really spot on. I will move quickly to Mila on this question. I know you had touched a little about NERA, right? The new regulatory act for insurance, but I just want you to speak about it as regards what Nigerians should be aware of and how these challenges will affect how we view insurance in 2026.
Yeah, I think probably the only thing to add to that is that NICOM has got backing now from the government to enforce the compulsory insurances. So we should expect to see a lot more enforcement on those compulsory insurances next year. And right now, it's the ones that concerns everyone, largely the car insurance. I think the police have done a good job in enforcing that one, stopping you on the road all the time. But I guess the ones that haven't really been enforced a lot would be the public building one. We should expect to see some activity there, and the construction. So if you're planning a construction project, that is something to be mindful of so that you don't get embarrassed in the process. So I think, yeah, those are the main couple. This group life, but that's institutional. So I'm talking about retail. There's some other insurances that are mostly institutional, but for the individuals like you and I think these three are the ones that we should expect really from NERA from next year. Thanks.
All right, thank you so much, Mila. Really appreciate that. I would move quickly to Adeze, right? We talked about.
Sorry, I thought I should mention
Okay.
in addition to the compulsory insurances, the insurance companies now have a lot more capital. That's a consequence of the new act. So the law has required that insurance companies now increase capitalization. So I know whenever you buy insurance, you are concerned about the security there. Would the insurance company be able to make that payment? So you can expect that you would have bigger insurance companies that have more capacity to pay whatever claim that you may be able to make. That's a consequence of the new act as well. Thanks.
Yeah, so I mean, it should put a lot of trust. Insurance
Confidence. Yeah.
Yes, because I mean, I saw one of the questions saying, how do you think I should trust that if I give you my money and I want to make a claim? People ask that question every time. So I think with the new acts, insurance companies are expected to have higher capitals, and of course, that means more money available to pay claims when or if claims occur. Thank you.
And maybe
very much.
Vincent, maybe you
Yeah.
should guide the audience also about the claim process, because that's a genuine concern. If you ever get into the situation where you have a valid claim and the insurance company doesn't pay, there are approaches to resolving that. It may be helpful to talk through that maybe in the closing.
Yes, we sure will. We'll talk about that as we round up. Yeah. I'll just quickly ask Adeze my next question, which is around credit life insurance. A lot of Nigerians don't know that when they take a loan from banks, for instance, Access Bank, they in terms of repayments, in the event of the borrower's untimely passing, the risk of that repayment is passed on to the insurer, right? Now, this protects families from financial burden. I mean, in this case, rather than passing burden to your family in terms of untimely death, it's more of passing something better. You're passing inheritance and all that stuff. Now, how is Access Bank extending this approach to other products and customer segments in terms of embedding insurance in this product to make lives better? And maybe also talk a bit about the credit life insurance.
Yeah, thank you very much. I think I think we had mentioned it somewhat before on that whole ecosystem of bank assurance, trying to make it easier, right? So that it's easy for there's something neat for everyone. So in terms of credit life, if you borrowed today, it's already embedded in your loan, the credit life, and also even the protection of the asset. So I'll call it double gain, because once you're in it and you've taken a facility, a loan to, let's say, buy a generator, right? Your family is so covered that in the event of anything mishap or even loss of job, is all in it. You'll be good. There's that headache or that financial burden, you're eased of it. And then the one of ensuring even the asset, in the event anything happens to the asset, right, you're also taken care of. We've extended it even to the mortgages, right? Today, people that we give mortgage loans have their credit life, also have the asset itself. We've even gone further to even do the household insurance, right? So that even all the components in the house. Then what about the SMEs, where we have even done the fire and against special peril, right? Most of us, like you rightly said, we keep praying, right? And leave, what is even within our control. So that's why it's been made so much easier, right? In terms of having that embedded insurance, so that while you're even at it, right? It is easier for you to just get on it. I had spoken last when I had said that some of the gaps in 2026 will even help the journey. But even today, as it were, you can actually just go on your banking app, star 901, where you go to for your opening of accounts, where you go to for taking normal loan, where you go to for making normal transfer, you'd actually get access to your insurance. You can buy your e-tab, you can buy your special, you can buy your fire and special peril. You can, subscribe to any of those insurance coverage very, very, very easily. So those are some of the innovative ways we've tried to embed it, and even on the app. Next year, just to give you a sneak peek of what is about to come, we'll even add some reward points just to endear that right behavior, okay? Because if our customers actually entrust us with their money and they see that we have taken demonstrable means or ways to actually confirm that we really do, earn their trust, I want to believe that they would even keep more money with us and, keep being. So in terms of embedding insurance, way to go. And that is why it's across all the journeys, even across for all the segments, whether you're borrowing, whether you're in MSME, trying to, create a good livelihood for yourself. So I think that has been well taken care of. Thank you.
Thank you very much, Daisy. Thank you for that. Of course, it'll be nice to see reward points being infused into the app and help people maintain right insurance. Actually, is right behavior, right? Insurance is right behavior, so you don't have to put, because the absence of insurance is putting yourself and the people close to you and even another person at risk, right? So I'll just quickly take one round of questions and then we'll look at what we have in the Q&A session. Kehinde, I want you to talk about before we talk about claims, I want you to just quickly talk about a little bit practical, right? Many Nigerians don't realize that insurance is actually affordable. It is very affordable, right? Even though I'm saying so myself, but I know it's actually very affordable, even for low income and middle income earners. Now, for someone starting from the scratch next year, for example, how can they build a balanced insurance portfolio? I've seen people in the question saying, can I buy these different packages that you mentioned in your presentation? Can I buy them separately or I can buy them as a bundled package, right? So someone earning 100K, 200K, 300K, even 1 million, if you can give us just in 1 minute a nice example of the kind of policies that they can buy as part of their financial planning in 2026, and basically just some realistic figures to guide them.
Okay. So I'll just like to let everybody know that insurance is affordable. For as low as 2,000, 5,000, you can get different insurance covers, right? Depending on the sum assured. So let's just do a typical example. Let's say you earn 100,000 a month, right? You can say 2 to 4% of your salary monthly. That's about what, 2,000 to 4,000 naira every month. Let's say you keep that away for insurance. 2,000 naira in a year is what, 24,000 naira for the year, right? With 24,000 naira, you can actually buy a term life insurance between 500 to 1 million. Right, you can buy a personal accident disability cover. You can start a savings plan with those small as that. So what we're saying is, even as little as that, in case you get injured, right, you are still covered to a certain amount of money. And of course, as your salary increases, then you start taking higher volumes, higher sum assured as it goes, right? So as little as 100K a month, you can remove 2,000 naira, right? Multiply that by 12 in a year, that's 24,000. 24,000, you can buy insurance of up to 1 million, up to 2 million with that amount, right? So there are different instances. Just look at, and as you go higher, by the time you start making, let's say 300,000 naira, you move another 2 to 4% from that. We're looking at about 12 to 24,000 per month. Push that in a year, that's 144,000 in a year. You can start buying certain policies. You can buy a standard lifetime of 20 to 60,000 naira for 1 million to 5 million cover. Your motor insurance can come in. You can do as much as what? Your motor vehicle of 120,000, 250,000, and that's how you keep growing. You can start your home appliances. So for example, someone, like you said, someone asked, can you bundle different insurance products? Yes, you can. Yes, you can buy different. So for example, in Coronation, we have one called the family bundle, right? For as low as 70,000 naira in a year, right? You can have insurance cover of up to 14, 15 million naira sum assured. It covers your household items. It covers your family's household items. It covers critical illness insurance. It covers what? Education plan in case of death. If death occurs, your children are certified that will get certain amounts for permanent disability for just for 70,000 naira, right? Father, mother, and children, they are all covered. So insurance can be bundled. Yes, insurance is affordable. And just like the term I've given, you earn 100,000, you're removing 2K. Please remember, 2K is not even enough. It's not even enough to buy shawarma, right? And that's why you're removing every month to just cover yourself. And with time, as you start, your earnings start to increase. Then you start to increase your portfolio. You start to increase the portfolio in terms of the sum assured. You're earning 100,000, you start moving 2,000. You start earning like 300,000, start moving 15,000. You start earning like 1 million, then start looking at 50K, 100K, and then you start seeing yourself growing your insurance portfolio. Hello.
Thank
Okay.
you. Thank you very much, Kehinde. I mean, every attendee listening, bring the shawarma money, right? Bring 2K can't buy really solid shawarma again. Oh.
It can't at all. Imagine what you're saving yourself with 2,000 and you can get an insurance plan that covers you for death, permanent disability, and of course, medical expense of up to 20,000, just with 2,000 naira.
Yes.
And that's even 2,000 as even 2,000 per annum. So you can imagine what you can do with like of 5,000, 10,000, 20,000, 100,000 per annum.
Yes, actually, imagine 2,000 in a year, right? That's I'm trying to see what it can cover. I don't see even airtime or data or something, but 2,000 naira in a year, right? And can cover a lot for you. Imagine if that's even monthly. That's a whole lot of cover if anything happens to you or whatever it is that you have covered. So I think that people need to understand insurance is affordable. You talked about 70,000 bundled plan covering up to 14 or 15 million in household items, in critical illness, in children's education, a whole lot. And I think that for different stages, even from our poll, people need to look at those kind of policies. A final question for Mila. I just want you in the same light to talk about practically the different segments that you've consulted for, right? The different groups that you know, young professionals, families, SMEs, gig workers, corporate employees, right? Which of these groups are most financially vulnerable? And how do you think each of them should be looking at insurance in 2026? These different groups that you know of, how do you think they should look at insurance in 2026? Maybe an area that they are not paying attention to.
Yeah, I think, thank you for that question. Typically, what drives vulnerability is you don't have income coming in. The moment income is not coming in, you're vulnerable. So that would typically be people that are not in employment, and we already know that that's a huge population in Nigeria. So when I see those unemployment statistics that unemployment is under 5%, I'm wondering where they're getting all those data from, because people are largely unemployed. So that makes them very vulnerable. Then we're also seeing a trend in old age. So traditionally, Africans have given birth on the assumption that the children are going to raise them and take care of them. But things are changing now. We're seeing families, old people, where all of the children have japa, and there's nobody left to take care of them. That's an increase in trend. So I think we would see things are changing, and those people in that age group are now also becoming vulnerable to social issues, which their own parents didn't have to deal with. I think in terms of the sort of insurance that each of these groups would need, I think Kehinde has done a great job of stratifying that. But just to reiterate, when you're young, between 18 and 30, you've just started working, I think the most critical thing at that point is just you want to guide against something happening which halts you, which stops you from achieving your potential. So whatever that could be, health-wise, could be death itself, could have young children at that point. So I think the priority in terms of your product selection should be anything that really stops your ambition at that point. Once you get above 30 to 30 and 55, at that point you're trying to stabilize and consolidate. So you're trying to guard against anything that stops you from or makes you to lose what you've gained, what you've gathered. So yeah, you now need increased insurance more than you needed before to ensure that you don't lose what you've built. And then obviously by the time that you're above 55, I think health concerns start becoming the bigger priority. So protection for health, long-term care, which like I said, is something which wasn't a big issue in Nigeria, but now is going to become increasingly an issue for old people. So things like that, the critical illness, which has been mentioned very well by Kende, critical illness becomes an even bigger issue. But even we're also seeing a trend that younger people are getting very vulnerable to critical illnesses. Getting people now in their 20s and 30s that are having these illnesses for various reasons. Yeah, thanks.
Thank you very much. Thank you very much, Mila. I mean, you're spot on. We need to get insurance for whatever it is that stops your ambition, right? Which is why it's important to think these things through. It's important also, I know that we're also providing free consultation for attendees who would love us to look at their personal space, look at their life and understand what is essential for them, right? At no cost, and then we can recommend the best insurance products for them. So I think that people can take advantage of that at the end of the webinar. Reach out to us. If you've not filled the poll, answer the poll and we'll contact you and give you a free consultation on best the most essential insurance policies at your stage of life, based on your earning, based on where you are, and of course it's up to you to take it or not. So consultation is just free. Yeah. All right, we'll move to Adeze. We've talked about how easy it is to buy insurance because you're a banking customer now, right? Through bank assurance. But with that comes some risk. Customers probably are scared of fraud, sharing their data, information, and most importantly, if you automate your insurance process and payments, customers probably would be worried of not being debited without consent, right? Would you deduct their payment without consent? And also just tell us the measures you have in place to say, if I'm an Access Bank customer, I buy insurance from Access Monster 901, how is it possible that it's only when I say pay, you pay? When I say stop, you stop. I will wake up one morning and say that I've been debited. So just talk to us through that process.
Yeah, thank you very much. And I must say it's a great concern for our customers. And I think we've been able to hold it very much. So because it's even a digital solution, it's so easy for you to actually see that your consent is required before renewals are made, before you actually pick up your insurance. So I would say that the fact that it's a digitized journey, you have that consent control even more within your power, not like when it's manual, you're not sure when you signed up or whatever. So with the digital journey we've created, you're fully in control. It is with your consent that those renewals or those insurance subscriptions will be effected. So we've got you covered there. Then it's also good to know that Access Bank is bound by the Nigerian data protection policy. So we are highly regulated with respect to the share of data and information. So but rest assured that with us, your data is well protected. And in fact, if you're able to see the conditions of required to be able to, sign up any relationship, you see all the details there, and it's for you to go in or opt in or say you don't want to go in. Also, it's important to also mention that we have our guide in terms of the strategic agreement, right, between the banks and the insurance companies, as guided by the NICOM agreement. So we have a framework guiding all the activities, guiding all the referral, even despite happening on the digital channels. Then what else have we taken even as a bank to ensure that those enforcements are happening? We have a risk assessment controls and audit trails that actually supervise what we do. So in terms of actually saying that we should be able to earn your trust and give you opportunity to actually try it, right? because we've got your back, even in the design journey, and to make sure that all the nuances and all the complaints that customers do not want have already been taken care of. Yes, so I can confirm that to you, and I want you to give it a try. Thank you.
Thank you very much. Thank you very much, Adeze. You've heard it. Everything is within your control. It's within your consent. We will not debit you, or the bank will not debit you without your consent. And of course, you're in control of this new digital journey from end to end. So thank you very much, Adeze. Kehinde, let's quickly talk about, we're just looking at questions from the Q&A. So for those who still have questions, you can drop your questions and we'll take them. Our team is answering some of them while we'll take some of them on the call. Let's quickly talk about the claims process, right? Someone asked a question and said, how can you give us trust that insurance money is not difficult to get after incidents? That is, to take it is easy, but to pay is Herculean, which makes people be weary. So yeah, just talk us quickly, maybe in a minute or two, on the claims process, right? What should you do if you in an incident that needs claim?
Okay, I think the first thing I'd like people to understand is really insurance companies love to pay claims more than you want to report your claims. At least insurance companies are responsible like Coronation. We are eager to pay claims because guess what? The only way you can test an insurance company, the way you can prove the worth of an insurance company is the claims they pay. So if you have an insurance company that says we've never paid claims before, then there's a problem. The payment of claim is what we see, is what we use to show that yes, we are responsible for what we are. So number one, I like us to understand that a lot of insurance companies do love to pay claims. So don't be afraid. Now, if an incident occurs and you want to raise a claim, for us, for example, we have the digital platforms, our claim portal, where you can just go in and log in your claim. I think the first thing you need to do is just notify your insurance company immediately anything happens. Immediately, whether you have the documents available yet or not, just notify them that, look, this incident occurred while I was here, and this is the thing. Either it's a burglary, either it's a car accident, whatever it is, notify your insurance company immediately. Because part of the things that you need to know is that there's a period in which you need to notify when a claim occurs. So you can't come in December, and we can't come today is November 26th, and we say that, okay, look, I had an incident in January, I need to take the claim. No, you need to notify them immediately it happens so that there's no, they are aware. And most times insurance companies will then advise you, okay, this is the best way to go. These are things you need to get, and they'll support you in getting the claim treated. That's one, notify on time. Then number two, if we look at the NIRA Act, just to give you that confidence, right? The new law has specifically done some things on that claim processes. So for example, an insurance company has 60 days to pay a claim the moment they are notified. It is a law. Any insurance company that doesn't pay within 60 days of a valid claim, right, will be infringing the law, and there's a penalty of almost 500,000 that the insurance company will pay monthly until the claim is settled. So that's like an assurance for you. There's a penalty when the claim is delayed. So within 60 days, you ought to have been settled. And if not, you can actually report to regulators. And regulators even have the right to pay you without from the insurance statutory deposit with them, right? So if you have a claim, insurance company has not paid after 60 days, you can lay your claim, you can report to NICOM, who is the regulator for insurance, National Insurance Commission, and then they will take it up. Insurance company will be fined 500,000 for not paying the claim, especially if it's a valid claim without any issue, right? Then two, there's also the new act also established the framework, which is the policy protection, the act a policyholder protection fund that helps to ensure that payments is made even if an insurance company becomes insolvent, your money is still safe and secured. NICOM is also pushing for digitalization. A lot of insurance companies are also pushing their claims processes for digitalization. Like I said, for us in Coronation Insurance, all you have to do is go on the claim portals, plug in your claim. You can actually track your claim process from level to level to see how it's going. You can then, so it's also of transparency. You also have speed, right? You don't need to come to the office. All you have to do is go as little as that. So just go and play a digital process, our claim process, and then everything is done, right? And most times, once you sign your DVD, within 24 hours, you get your claims paid. A lot of times, what actually delays in claim is just documentation. And one of the things the Act has also done is also to simplify documentation. So right now, it's actually easier for you to make claims with less documents, right? So please feel free, once an incident occurs, notify your insurance company, right? They will advise you on what you need to get to them. And once you get it done, they send you a dividend and then your confirmation. So, okay, look, this is what happened. This is what you're going to pay you. Once both of you are going to sign that, money is paid. And of course, like I said, what NERA has also done is to create some other new laws that will ensure that insurance companies keep paying claims. Yeah.
Thank you so much, Kendi. I mean, spot on. We at Coronation pay our claims. Once you've completed all documentation, 24 to 48 hours max, your claim is paid to you. And yeah, of course, so for those who have incidents with insurance companies having not paid claims in a long time, 60 days, you can escalate to NICOM, and of course, yeah. All right, thank you very much. We'll just take some of the questions. This question talks about stock or insurance, right? If either, can you explain which is best to have, stock or insurance? Kenny, do you want to take a stab at it, or do you want us to?
Yes, stock or insurance, which one is preferable to buy?
Yes.
Well, they are both two different things, right? One is you're making income from one. Let's say one's like a source of income. The other will protect you to ensure that you enjoy the income you make from that source of income. So I advise you have both, because they're both speaking to two different things. While one's an investment, the other one's a protection, right? The insurance ensures that you enjoy your investments. When it's time for you to enjoy the dividends of your stocks that you've bought, the insurance will ensure that in case anything happens, for example, you fall ill. Let's say you bought stocks, dividends 100,000 is paid, you now fall ill. And you now have to use the 100,000 to pay the bill for the illness. No, insurance will ensure that you enjoy that money you're earning from your dividends. So if it's possible, buy the two.
Thank you very much. Well, I'm really spot on. If it's possible, please buy the two. Okay, Ken, there's someone again is asking a question. This person says the question may be funny, but going by the current state, can insurance pay ransom if kidnappers abduct someone, or will they engage security personnel to rescue the abducted victim? There is that. And also, someone abroad being able to get an insurance policy in Nigeria. So it says, how possible for someone abroad, maybe Canada, to have insurance in Nigeria? Is it doable? And can such person have, for instance, insurance in Canada and Nigeria at the same time?
Okay, can you have insurance in Canada and Nigeria at the same time? Yes, it's possible. You're in Nigeria and you buy an insurance policy in Nigeria. The good thing about life insurance is that we don't say that you only have to die in Nigeria or an incident has to occur in Nigeria. You can be anywhere in the world and an incident occurs, you're still valid, you're valid to file for a claim. So you can have yes in Nigeria and in Canada. And of course, when it comes to assets, right? Your assets in Canada cannot be insured in Nigeria, right? Your assets in Canada are insured in Canada, while your assets in Nigeria will be insured with companies in Nigeria. So yes,
your life.
That's what I said. For life, you can have life both Canada and in Nigeria. So for life, you're allowed to have multiple life insurances in Nigeria, yes. And like I was explaining, that your life insurance doesn't mean that you have to be in Nigeria before you can. No, you can be anywhere. So even if the person buys the life insurance in Nigeria and let's say something happens while the person is in Canada, the person dies also, the person is still valid for a claim, will still be paid your claim. So yes, it's possible to have both Nigeria and Canada.
Great. Thank you. Daisy, someone says, what type of insurance can I purchase now on my son in university? Which best insurance fits his present status as an undergraduate? So, I mean, Daisy, you can also add to that.
Yeah. So I think you would need child's education support, for your child. And then what about also the e-term, right? You can get that. And then the good thing is that on the e-term, you can actually go to our digital channel today to get it much easily. Kaylee, are there other variants that you have that you can throw more light on?
Okay, really, Adaize, I think you've said the ones. Well, you said it was depending on the age of the child as well, right? A lot of times, if you are not above
They're not
18,
undergraduates.
undergraduate, probably if he's 18, if he's above 18, he can actually purchase certain things for himself,
So,
right? Yeah, the critical illness you can buy for yourself, and like just as they said, the E10 that protects you from permanent disability, death, or medical expenses. It's available and it's very cheap. 5,000 will give you up to 500,000 limits. 10,000 will give to 1 million naira limit. You can buy all those as well. And especially, I like the part when she said that the savings plan at that age yet, you should start. The undergraduate now soon finish and will be going for NYSC, right? We can start planning towards the future. Yeah. And of course, even for the parents as well, I think you yourself should get an insurance for yourself. So in case, God forbid, something happens, you know that the school fees of your child till graduation is covered. Yes.
Okay, spot on, spot on. This question about claim is everywhere, right? Talks about, in fact, the person says, what if nothing happens is a valid question and has not been answered. So, yeah, so there's that part. Another person says that if a client has a frequent claim history, we tend to ask them to pay higher premium because they are deemed higher risk, right? But does Coronation offer like a cashback bonus on premiums if the client has not claimed in like 5 years?
Yes, we do. Yes, even at the claim for 3 years, there's a cashback. Honestly, and I think that's what a lot of insurance companies are also looking at as a form of reward. But you know, because nothing happens to you doesn't mean something else will happen to somebody else. That's why you know insurance is a pool of funds, right? I'm collecting from the three of you to insure exactly. So even if nothing happens to you, just know that you are paying for somebody else. So you should be saying that yeah, you're taking care of somebody else. But yes, we do have cashback if you have not had a claim for at least a minimum of 3 years.
Okay, great stuff. So we have cashback policy if you've not made a claim for 3 years, some percentage cashback. There is also if you've paid and nothing happens, the simple answer is the claim has the premium has been taken care of. Don't worry, the premium has been paid, so it's not refundable. But of course, there is a cashback policy if you've not made a claim for 3 years, right?
So listen, another thing about insurance is the money you're paying. You're saying is like you're paying for a service, right? If you go to a hotel, right, you pay them, you use the room, and you go out, right? So you're paying for it. So what you're paying for is, look, insurance company, I'm giving you this amount of money that in case anything happens to me this year, I need you to pay for it, right? So it's not like you're paying that in case nothing happens. It's a valid contract that is annually renewable. Right? Look, you guys, whatever happens to me this year, take this money. If anything happens to me, say you have to make that pay. You have to now take care of me. So it's more or less like we're both entering into a contract, right? It's a 1-year contract. You want me to do something for you, and I'm saying, okay, look, I'll do it for you. Because it does not happen doesn't mean that I'm not fulfilling my obligation, right? So I need to people start looking at insurance like that. But definitely, if nothing happens, like Vincent said, insurance is something that you should have and never need, right? That need and never had. Because the Adaino, once you join the Adaino clique, it's a very bad clique to be in.
Thank you very much, Kendi. I think that's spot on. It's something that you need, that you should have and never need than you need and you don't have it. That's really, really cool. I think we can take some more questions. Someone is asking, are there life insurance packages where one can fund, say, 5 million or 10 million and leave it for 6 to 10 years to earn money, which can be taken either biannually or at the end of the tenure, either by the owner or relative of the owner, if the owner is late. I think the person is speaking to a flexible long-term investment or something.
Yes. So like I said earlier that one of the advantages of investing with insurance companies is that you also have a life cover that goes with your investment. So let's say, for example, you leave 5 million for, you want to say for 10 years, right? There will be a life cover. So the number one, you have interest that is accrued on that money. You have access to your money once it's due. Then two, if the insured or the person that does the investment should die, right? The 5 million with interest is paid to the beneficiary, as well as the life cover is also paid to the beneficiary. So let's assume you're saving that there's a 500,000 life cover on your investment, and the investment, the person that investing dies, 5 million with interest is paid to the beneficiary. Then the 500,000 life cover is also paid to the beneficiary. So there are a lot of investment plans you can do with insurance, long-term investment, short-term investment, 1 year, 5 years, 3 years, that will ensure you're earning income, you're earning interest, good interest, and also your money will pay at the end of the period. Yes.
Yeah, I think yeah, that's correct. It reminds me of a story that was shared by one of the underwriters in our last webinar, where he talked about when we were talking about life insurance. A customer who was investing with us, and he had saved, I think, 100K every month for 6 months. It was going on and on, but after 6 months, he passed, and his family just knew that he was saving 100K with this company, and was investing 100K with us, and after that, when they came to collect the balance of his investments, right, the total of what he has invested so far, they were presented with a life insurance cover, the claims from life insurance, and they were surprised. I mean, the shouts in the office made it look like something that happened, but it was shouts of joy because they had given them a whole lump sum that they never thought
Yes.
to get.
Yes. So we have endowment plans as well. You have
Yeah.
a child that you're trying to save for your child is going to secondary school. Are you already planning for university? That okay, in 7 years' time, I'll need about 10, 20 million, and you're saving towards that. Endowment plan says that in case anything happens to you, either in the first year, the second year, the third year, you will be paid the full amount that you're expecting at the end of the tenure. So that's beautiful about endowment. That's another type of savings that we have in insurance that also helps you in your savings. So it's not just you're just looking at what you get at the end of the year, at the end of the savings plan, but also during the savings plan, we're there to preserve you. We're there to ensure that your plans, your vision will be fulfilled, whether you're there or not. That's the comfort of insurance.
Thank you so much. Ken, they say we've not answered the kidnapping matter. So, someone asked a question around, can insurance cover for ransom, or would the insurance company get security personnel to find the person? Is there insurance for incidents like kidnapping?
Some insurance companies do have insurance for kidnapping, right? There's a way that's done for corporate entities, for individuals. Yes, some insurance companies do that. So even if that happens, then of course there's a limit that we pay to the people. So yes, once it's available, yes, they will be paid.
Okay. Thank you very much. I'm just trying to see the other questions that we have opened. Someone says, what happens to my policy if the insurance company liquidates?
Okay, so remember I said earlier that with the new NERA Act, right?
Yes.
They've created the Consumer Protection Fund that helps you, more or less like the NDIC of banking. Yes, that helps you, make sure that your payments made, even if the insurance goes insolvent.
Okay, great. So regulators can handle that, and yeah, I think that makes sense. So I mean, the other questions are pretty much same. I'm sure that our team are handling the questions, and if there are questions that we've not taken, I think that we would take time to send them to you if there are questions that you think we've not taken. Someone asked if critical illness covers people over 60 years, and if it does cover a case of cancer, generally.
Yes, when I made a definition for what critical illness is, right? Life-threatening illnesses that require immediate, right, attention, specialist attention, and of course, it's captured in terms. It covers cancer, it covers stroke, it covers transplants, any kind of organ transplants, right? Yes, cancer is covered under critical illness.
Okay, someone is talking about what opportunities can an insured explore to enjoy ex gratia if we don't have a broker? Because brokers usually leverage their business relationship with insurance to enjoy ex gratia payments, which an individual policyholder may not get.
So the beautiful thing about insurance, you can always negotiate with your insurance company, right? It's open for negotiation. It's not a cast in stone. You can decide, okay, look, this is what I want. This is what can you offer this to me, right? And if they say yes, it's sealed. And if they say no, it's not. So because brokers tend to enjoy certain things by law because of the services they render, right? So for example, brokers earn commission because of what they do. They prefer you with professional advice when they're treating your cases. They take the stress of you looking for an insurance company, reading through the policy documents, they do all that for you. So they're entitled to certain things, right? So they have you might say they have a closer understanding and higher relationship with insurance companies. But you can always walk to your insurance company and tell them, this is what I want. Do you guys agree? Yes or no? It's negotiable, yes.
Okay.
So individuals can also enjoy certain things.
Yes, yeah. I mean, I think it's also important to, at this stage, mention to people to always go through their policies. Once you're getting a policy, you need to go through it, study it, understand, and then negotiate, right? What do you want to be included and what not? There's a question that keeps coming up. It says, maybe this is between Adesi and Kehinde. It says, is the risk of borrowing to take an exam, like an expensive exam, right, and not passing, is it covered under a credit life policy? Or is it covered under any policy, right? Where you borrow to take an exam?
Maybe just to link it up to the 2026 emerging opportunities. So maybe if we keep taking it and we actually see the palpable size, we'll bring out a policy like that.
Yeah, I think I'm not hearing this for the first time, right? Someone having said there has to be some form of policy for some expensive exams. What happens if you take them and not pass, or there has to be some benchmark for passing? And what if people deliberately fail and begin to take claims and all that stuff? Kehinde, what do you think about this?
Exactly. So that's why insurance is you are paying for something you cannot anticipate, that you're not expecting, right? Yeah. Passing an exam does not qualify under insurance because you have to be to pass, right? Just like you said, if I know that yes, I'm going for an exam that is expensive, right, I might as well not pass, right, and get the claims, right? So please, exam doesn't cover, it's not under insurance. It's not a risk that's covered by insurance. Because I might as well say that, okay, I want insurance to pay for my visa. If I'm not approved of visa, there should be an insurance that will cover that. No, those are not. It's supposed to be risk that are uncertain, risk that you cannot envisage.
Yeah.
All right. Thank you so much, Kehinde. Thanks so much, Adesi. Adesi, any final words before we wrap it up?
I think final words for me will be that it's been a great learning session. I have learned a lot from Mela, Kehinde, Vincent, yourself, even in preparing for this session. And I just encourage our over 160 participants that look, for 2026, let us prioritize it, right? We will pray, right? We are all Christians, we are all Muslims, but it never takes away the importance of, putting away, just small funds, right? To make sure that those interests we hold very dear are covered. Let it be part of a New Year resolution for some of us. Thank you.
Thank you very much. Kehinde, any final words?
Yes, I'd just like to say that 2026 is coming. We've all started writing our goals. We've started thinking of what we're going to do at the end of the year 2026. I think we shouldn't allow anything stop us in achieving that thing. And one of the ways we can ensure that we can forge it without fear is getting an insurance cover, especially building your insurance portfolio and ensuring that everything about you is preserved. So that at the end of December 2026, you can look back and say, yes, I started with this plan and I finished despite all the hurdles I had to cross, despite all the unforeseen circumstances that came about, I succeeded. So get an insurance policy, secure yourself, secure your family, secure your business. Thank you.
Thank you. Thank you very much. I'd like to say thank you to all our panelists, including Mila, who had to step out, and everyone who's been very contributed to this session. One of our attendees even mentioned that he stayed till 5 a.m. in Canada just to attend this, and he's happy that we took his questions. And he says, my staying till 5 a.m. in Canada is worthwhile with the education provided specifically so far. So he expresses his gratitude to all of us, and I also want to convey that gratitude to you for the time you have taken to be part of this, the preparation, and also taking time to explain each concept to our attendees. We are truly grateful to all our attendees who've found time to join this session today. We hope that the knowledge that you have gained would help you to have a great 2026 as you begin to plan. You plan your goals, you plan your investment strategy, your savings. We have to make it in 2026. We have to also protect what we have made and what we will make. So you have to protect it with insurance. On our screen, we have our Insure and Win promo season 2. The Insure and Win promo is back, bigger, better. Last year we gave out a 2024 Kia Rio to one of our winners, one of our customers who bought a policy from us and won. This year we're giving another car, we're giving an iPhone 16, we're giving gift vouchers, a refrigerator, generator, and a whole lot of gifts. All you need to do is to get insured and stand a chance to win fantastic prizes, right? As you can see, insurance for everything. So just buy a policy from us, whatever it is, and you stand a chance when we do the draws to win any of our fantastic prizes. So thank you very much. We'll send the recordings to everyone who's registered and attended. We'll send the presentation slides, and of course, we'll take your questions. To those who have subscribed for the free consultation, we'll reach out to you. And if you're still interested, you can send an email to us and we would contact you to take it up from there. Thank you, Daisy. Thank you, Kendi. Thank you, everyone. Thank you to the guys behind the camera. Thank you, and enjoy the rest of your day.
Thank you very much, Vincent and team. Thank you. Thank you.